Hello, you're welcome back to another episode on IKEMS Finance. Today we'll be talking about the financial reset or the banking reset taking place in Taiwan. There are news reaching us from Taiwan that the Citibank group in Taiwan is pulling away from the Taiwanese consumers and will only provide commercial services. Now, what does this mean? Citibank has been in Taiwan for about 60 years now, which is about 6 decades. And on December 22nd, the Financial Supervisory Commission approved DBS Bank's 93.6 billion Taiwanese dollars or equivalent of $3.05 billion purchase of Citibank's or Citigroup's Taiwanese consumer financing subsidiary. After absorbing 45 Citigroup branches by August, DBS will operate 74 Taiwanese branches. DBS will buy 2.79 million Citibank Taiwan credit card, making it the sixth largest domestic bank. Following the transaction, DBS Bank will withdraw 66 Citibank Taiwan ATMs. DBS online banking strategy encourages consumers to use ATMs from competing banks. According to the Liberty Times, Citigroup intended to sell its consumer finance division since profit margin had dropped to less than 3%, while its corporate finance division had profit margin of 27%. Citigroup intends to expand its consumer financing businesses in Australia, Bahrain, China, India, Taiwan, South Korea, Malaysia, the Philippines, Poland, Russia, Thailand, and Vietnam. Citigroup will cater to Taiwan's affluent. Those with more than 3 million US dollars may be offered Citi accounts in Singapore and Taiwan and Hong Kong. Priorities have shifted. Citibank's first Taipei branch opened in 1965, offering corporate finance, investment banking, consumer financing, and other services. With 66 branches, it became Taiwan's largest overseas bank and the 13th largest domestic bank after acquiring the Bank of Overseas Chinese in 2007. Citibank was one of the first foreign banks to offer vehicle loans, mortgages during Taiwan's economic boom. It bought Taiwan's first investment and trust in 1988 in order to offer Visa cards and auto loans in Taiwan. Citigroup arrived in the market too late as Taiwan had already reached a mature per capita income level. Citigroup believed that when wages grew, the middle class will acquire fewer car loans, mortgages, and credit cards. Citibank was well known for grooming Taiwan's best financiers. During Taiwan's political isolation, Citigroup welcomed many Taiwanese supervisory authorities and corporate leaders to New York City courses. China Trust Fubon Financial President Jerry Han, Cathay Financial Chairman Kuo Mingjian, Taipei Citibank Chairman Sheng Zhengdai, and National Life Insurance Chairman Du Yingzong are all alumni of the Citibank um, um, corporate leadership courses which they offered New York. As it at its peak, Citigroup was the world's largest financial group, earning twice as much as its competitors, according to Liberty Times. Total income had fallen behind JP Morgan Chase and Bank of America in recent years. Jim Fraser, CEO of Citigroup, must resurrect the banking behemoth and capitalize on its untapped value, despite the fact that Citigroup's exit from Taiwan's consumer finance bank market may cost Taiwan and the Asia Pacific region money. She is streamlining operations. Well, I'll tell you, as much as we all have read the news and we believe that, but I will tell you that China has a hand in whatever Citibank is doing in Taiwan. This is a power play. This is more than politics, more than beyond what our eyes could see. Citibank wants to move into China, which is the second biggest economy in the world. And for them to do that, and for the Taiwanese government, and for the Chinese government, regulatory bodies to allow Citibank to operate freely in China, they have to bend to the will. Citibank have to bend to the will of the Chinese financial governing authorities. Now, which I believe that one of their conditions is that they have to stop financing you know, the commercial sectors like the consumer sectors, and they will focus on the commercial sectors, whereby financing industries and other other big corporate finances. So now what it means is China has a role here to play, and if you believe me, just take a look at the decision and the timing of the decision and looking at what is happening. And also, Citibank has interest in moving into Russia. What does it has to tell us? After we see the Western sanctions and companies leaving Russia, and yes, Citibank wants to expand their operation in Russia, in Bahrain, in Malaysia, in in Thailand, in Vietnam, in the Philippines, in South Korea, in Indonesia, in India, in Australia, and now in Taiwan. If you are a consumer and you have more than $3 million, Citibank may offer you accounts, but those accounts will not be based in Taiwan. Those accounts will be based in Singapore or Hong Kong, which still shows you that there is a power play here. You understand? So, well, let's just look at what happens, and we believe that they're making the best decision for their businesses and for themselves, and depending on what each and every one of us think about them. But if I'm to say I have a different opinion about what they're doing, China has a hand in whatever they are doing. China has a role here, and Citibank been in Taiwan for about 60 years now. This is about 6 decades, and have them having to open their first branch in 1965, which goes to show you that this it's been a long time coming, and they've been there, and they've built trust among the people. Yes, they are not making much profit. They had drop in their profit margins to about less than 3% in the consumer sector, and whereas the corporate finance division had to the profit margin for that sector increased by 27%. I understand what they are here looking at, okay, where they made the most gain and where they made, so they can see where to divert their money and focus more on. But it's all left for them to make their decision. I would just hope they're making the best decision, because um, just waking up and telling consumers, oh, you have to go and use other rival ATMs, and now a new bank has bought you. You don't know if those consumers want those banks, because those consumers saw those banks before coming to Citibank to open an account. This bank buying off Citibank's debts and domestic and all of that, the credit cards and the rest of them, having to offer services to the consumers. But I believe that it's just about, this is not really, you didn't give the consumers options ahead of time for them to figure out what to do if they had to pull or to close their accounts or move their money. But now, if there's one that have a bad, if there's any consumer that had a bad experience with their banks, the DBS banks, then it means that they are being forced against their will to actually subscribe, to go and start banking with a bank which does not agree with the business practices. But this is just all we're talking about here. Citibank, they didn't really give these people an opportunity to, or choice, give them pre-inform them so they can make the decision themselves if they actually want to proceed with what Citibank is offering them in terms of DBS Bank buyout, or if they want to put their money out and go to another bank. But the funny thing here is that if they had informed them and they put the money out, it should affect Citibank immensely. So which is why they went ahead and did that. But at the same time, it doesn't change anything. Well, let's just draw the curtain here. Please don't forget to like, share, subscribe to IKEMS Finance, and we'll look forward to more greater videos to come. Thank you.